The U.S. economy is at a crossroads, and the Federal Reserve's latest report has everyone talking. But here's where it gets controversial. While economic activity and employment have barely budged in recent weeks, the Fed's decision to potentially cut interest rates this month has sparked intense debate. Is this a cautious move to stimulate growth, or a risky gamble under political pressure? Let's dive in. On Wednesday, the Federal Reserve released its Beige Book report, a comprehensive snapshot of the nation's economic health. The findings? Economic activity and employment levels have remained largely unchanged, with prices rising only modestly. This mixed picture seems to align with the growing sentiment among central bank policymakers, who are increasingly open to resuming interest rate cuts. And this is the part most people miss. The report highlights that businesses frequently point to economic uncertainty and tariffs as significant challenges. Sentiment across the Fed's districts is divided, with firms either reporting no change in optimism or expressing conflicting views about the future. After maintaining the policy rate between 4.25% and 4.50% this year, the Fed is now widely expected to reduce short-term borrowing costs by 0.25 percentage point at its September 16 to 17 meeting. This shift gained momentum after Fed Chair Jerome Powell hinted last month that rising downside risks to the labor market might warrant a rate adjustment. Powell cited troubling signs, including a government report from early August showing job growth had plummeted to a monthly average of just 35,000 since May. He also noted that President Donald Trump's tariffs are likely to cause only temporary inflation spikes. Powell's cautious tone suggests a gradual approach to rate cuts, emphasizing that labor market stability allows the Fed to proceed carefully. But this measured stance contrasts sharply with Trump's demands for immediate and deep rate cuts. The president has aggressively sought to reshape the Fed's Board of Governors to align with his agenda, even attempting to remove Fed Governor Lisa Cook, who has consistently voted to keep rates steady. Cook is fighting her removal in court, but the situation underscores the growing tension between the White House and the central bank. Here's the controversial angle. Trump's nominee for a vacant Fed board seat, Stephen Miron, openly supports the president's push for lower rates and advocates for stronger presidential control over the Fed. Miron's confirmation hearing is set for Thursday, with Republican lawmakers racing to secure his vote at this month's Fed meeting. Critics, including analysts and global central bankers, warn that Trump's actions threaten the Fed's long-term political independence, a cornerstone of its ability to combat inflation effectively. But will Trump's efforts pay off in the short term? Two of his appointees already on the Fed board dissented in July in favor of a rate cut, but neither has called for an unusually large reduction. Meanwhile, the latest Beige Book summarizes data collected through August 25th from the Fed's 12 regional banks, painting a nuanced picture of an economy facing both headwinds and uncertainty. What do you think? Is the Fed's potential rate cut a prudent response to economic risks, or is it succumbing to political pressure? Share your thoughts in the comments. This debate is far from over.